What is up, YouTube? Welcome back to Stocks by the Numbers, and today we're taking a quick look at Safe Bulkers here. I've been trying to make this video here for about the last hour and a half, but I just keep rambling. It's too long, and I'm really going to try to just speak quick and try to bring all of these metrics here to the table. And first of all, we're seeing ticker symbol SB here on the New York Stock Exchange. This is a shipping company, if some of you people aren't familiar with it. Right now you can see it closed at $3.19. So for all you young investors or investors out there where money is tight, capital is a little rough to come by. You can't save up 50, 100,000 to take a position. This is a situation where you can really accumulate some shares, and in the long run, it could potentially pay off for you. So here we're looking at a market cap 390 million, and we have a PE of under 2, and it's yielding a dividend north of 6%. Right, all pretty attractive numbers here, especially when you come down here and you see in 2021 they did 329 million in revenue and the market cap is only 391 million, right? So in my opinion here, from $3 a share, conservatively, this is like an $8 stock, right? But we come down here, look at the net income, 174 million off of that 329 million. That is a margin those are profits that you cannot sneeze at. And we come down here, Simply Wall Street, we click on this article, boom, we switch over here. It's a shipping company. Okay, first of all, it mentions something that I preach on this channel here. Despite being in the age of tech stock, blue sky investing, many investors still adopt a more traditional strategy, buying shares in profitable companies like Safe Bulkers, symbol SB. That is basically what I preach on this channel, video in, video out, right? They talk about the EPS going from 51 cents to $1.63 in just 1 year. And you come down here, the earnings before interest and taxation margins jumping from 37% to 57% in the last 12 months, and revenues are on an upward trend as well, right? But look at this graphic. This graphic is, color coded. Here's your legend here, your little key, and it's showing you, your revenue, your earnings, your cash flow. And you can see this purple line here has basically remained flat, and the purple line is the operating expenses, right? So as you see, tail end of 2020 here, going into 2021 and continuing into 2022, revenue, cash flow, earnings off of that revenue, everything has been increasing really over the last 24 straight months. However, the operating expense has been capped and basically has remained flat. So the company is keeping their expenses in line to actually run and operate the company. However, the revenue and the margins off of that revenue, everything has been increasing while expenses have been maintained. That is an absolute recipe for success. If they can keep doing this, and we're talking 3, 5, 7 years down the road consistently, this stock is going to be worth so much more than it is right now. You're literally going to need a surgeon to remove my foot from your ass, because you knew about this because I am making the video right now, right? So we switch over here after looking at that phenomenal graphic, and as you can see, again, market cap 384 million, and you look at a revenue of 329 million. I always talk about the 2.5%. 2.5 times revenue, total revenue, 2.5 times total revenue compared to market cap. That is for basically the private sector, for them to see what your company is worth, right? But even if we do 2.5 times here from this level, you're looking at 800 million, which is basically at least a double from where we are now. So you're looking at $6, $7 a share. That's conservatively, right? If the company does begin to trade 4, 5 times total revenue here, again, 330 million, times 4 is what? That's 1.32 billion, which would be about a 200% move from where we are right now, which is basically a $9 stock, close to $10. So you really have the potential here to see some very healthy returns. And I just wanted to switch over here. If we go to more financials, I just wanted to show you guys. Right, this is the PE, this is 2021, this column, and this is the current number here. And as you can see, the PE, was very high, came down to earth, and now sub 2, which is just ridiculous. Price to sales ratio, same thing, really wasn't too high ever over the years with this company, which kind of is a good sign, right? It's like a realistic down to earth stock. However, at the same time, could be viewed as tremendously undervalued. Price to sales ratio a little over 1, price to cash flow ratio about 1.5, really the lowest it's been over the years. And the price to book here, this is what caught my eye, 0.55, right? So it's trading at half the book value essentially. Book value, again, to reiterate, anyone who might not know, book value is, if the company has to close its doors and basically liquidate all of its assets, what would it be worth? And basically, the book value of the stock is about $6 a share. You could buy it right now for $3.19, right? So conservatively, even if this goes back to book value, you're looking at almost 100% return. But again, in my opinion, it should be trading at even a higher multiple, so you might potentially see even greater returns over the years. We come down here to the profitability ratios. I mean, basically every single number that you look at looks phenomenal. A lot of these numbers, look at this, return on assets, slightly negative, tried to go flat and positive, came back negative, and then boom, had a massive increase in 2021, which we spoke about. And as you can see, return on assets a touch below 16%, now up to about 18.25%. Return on equity jumped up to 30%, now 33%. Return on invested capital jumped up to 17.5%, now it's almost 20%. Gross margin percentage, 59% up to 65%. I mean, everywhere you look, it looks phenomenal here. And even if we look at the EBITDA, which I know a lot of people look at, earnings before interest, taxation, depreciation, amortization, EBITDA margin percentage, 73%. And we spoke about the net margin percentage before, is now up to a touch below 55%. Let me tell you something, boys and girls. Those are numbers that you should not be sneezing at, because every company wishes that they were earning 40, 50, 60% profit off of every dollar that they brought in. And again, book value of around $6, here $3.19 a share. Conservatively, like I mentioned before, if it trades, 4, 5 times total revenue, now you're looking at a $10, $12 stock. Plus, they pay you a dividend to own it. So while you're accumulating shares, you can either do a DRIP, D-R-I-P, which is Dividend Reinvestment Program, so you can collect the dividends that they give you and reinvest it into the company to buy more shares, or, you can collect a couple of dollars in income when dividends are paid. Obviously, it's up to you. It's entirely your own prerogative. But this is a situation. These are the types of companies that I like to bring to the table, right? Shipping companies, Safe Bulkers, SB, flying underneath the radar. You got a market cap of sub $400 million, and this is not a company that you might be talking about with friends and family, right? Everyone is talking about the technology sector, and this is why I ask you to step out of your comfort zone and don't be afraid to diversify a little bit, right? Because what could be bad for one sector, if the shit starts to hit the fan, could be good for another sector, right? So you might see a drop in value in the tech sector, but you could potentially have a winner in something like Safe Bulkers here in the shipping sector. You could own an industrial stock that might be going through a hard time and might be selling off, might be dealing with some domestic or even foreign problems, but it might be good for a financial company that you're holding also. This is why they talk about diversification, because if you're 100% in one sector and then the shit hits the fan, you owning Microsoft, Tesla, Amazon, these are great brand name companies, but at the end of the day, if the markets really do begin to tank, the one sector that we know is more highly valued than any other sector is the tech sector, which unfortunately I feel is where a lot of your guys' assets are. So, that's why we talk about diversification. Everyone's basically talking about the same thing. It's either a tech company or an EV company. And that's why I love to find companies like this, little diamonds in the rough that have, phenomenal financials. They have the numbers to support it. And, you could really see some serious gains here over, the next couple of years, or even in the short term here in the next couple of months, right? So I'll leave it at that, but this is definitely something that I wanted to bring to your attention, and whether you want to buy it or not, it's entirely your own prerogative. Whether you agree with me or not, that is your opinion. Let me know in the comment section below, though, if you agree with what I'm saying or if you completely disagree with what I'm saying. But you know, these are the types of companies that I like to bring to the table, because you never know, you know, where a good investment is, and where a good stock might find you. So, you know, just keep this on your watch list if you don't want to buy it, or, you know, if you feel confident in what I'm saying, step in, start accumulating some shares here, you know, at this level if you'd like. But Safe Bulkers, SB, definitely something to keep an eye on. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm, helps get a few more eyes here on the channel. If you appreciate the content I'm putting out, please do me a favor. Push that subscribe button. You know, it really means a lot to me, just seeing the community grow. I know now we're getting a few more comments here in the comments section below each video, so starting to have a little bit of a back and forth here, and that's basically what I'm looking for. You know, I want to bring something to your guys' attention. Some people will agree, some people won't. We'll have a back and forth. We'll look at all viewpoints, and then you have, excuse me, and then you have, you know, like 18 different avenues of information to look at to make a collective, educated decision moving forward, and hopefully, for the most part, you know, it'll potentially work out well for all of us. So, like I always say, I know markets are rocky, markets are uncertain, markets are volatile. I wish everyone success. I hope everyone makes a couple of dollars, and I'll see you guys in the next video. Have a good day.